Hi, this video is titled A Whiff of Wyckoff, Cara Therapeutics, because I'm going to look at the Cara Therapeutics stock that was brought to my attention by a senior technical analyst at stockcharts.com. And he tweeted this chart of Cara Therapeutics, which has run from the low 20s down to the 4s and now appears to be breaking out. And if we apply the Wyckoff method, or at least a basic understanding of it, we can take a look at Cara Therapeutics and see if there's anything of interest there. So here's the Cara Therapeutics chart in Options Master Chartist. And one way that we can look at it is with the conventional analysis, the candlesticks, volume spread, and the different volume indicators. And another way we can look at it too is with our volume spread analysis chart. And this is what the raw chart looks like. And then we'll put candlesticks on. But I've prepped it a little bit, and this is what the prep chart looks like. And we'll cover, again, just a whiff, just the basics of Wyckoff analysis in the chart. If you've never heard the name Wyckoff, he was a prominent stockbroker in the 20s and 30s. And at the time, Wall Street was a much smaller community, and people talked to each other probably more than they should have. And Wyckoff found out that it was always this relatively small number of people that were always making the big money. And he determined that he was going to find out why. And he did. And he wrote about it, and his results are called the Wyckoff method. And just to give you, again, a tiny little more background on that, at stockcharts.com, there's a college professor, Bruce Fraser, has a regular blog, Wyckoff Power Charting. And Bruce Fraser teaches a course, a graduate level course in Wyckoff method at Golden State University. And it's attended primarily by fund managers and who have tens of millions or hundreds of millions of dollars under management. And the reason they attend this course to learn about the Wyckoff method is because they don't want to get eaten by the bigger fish. So I think Wyckoff as a technique, as a method, is very important. And here's a little more about Wyckoff himself and the Wyckoff logic. I'm really not going to get into the whole thing. We're going to go look at the charts now and see what we can learn from it. But let's put up the markup of the chart. And the basics of the Wyckoff method are that there are certain operators, and they still exist. I think research has suggested at least that there are at least 100 institutional investors today worldwide who could buy the entire float of the S&P 500 out of petty cash. And the only reason, or the only thing that stops them from doing that, any one of them at least, are the other 99. Now, that's not to say that they operate in concert, that there's a secret cabal or a conspiracy theory. I don't want to get into that. It's just that when one or more start operating on any particular stock, their fingerprint becomes evident, and that's what the Wyckoff method set out. But we've had, again, Cara Therapeutics has fallen from 20 into a low of less than 5. And that was called the markdown. The distribution occurred in the 20s, and the stock was marked down. But there are just some basic chart patterns or chart points that become significant. And the first one is called the stopping point. And this is where the decline from the 20s was stopped cold. And that's called the stopping point. And from the stopping point, there's a small reaction that goes into a selling climax. And we can see that it's, the highest highest volume bar occurred at that time for the selling climax, followed by what's called an automatic reaction as shorts scramble to cover. And then another fall below the stopping point, and accumulation then occurs between the low point of the selling climax and the stopping point. And during this whole period, accumulation takes place. And it's often very quiet under the covers. Nobody is looking to attract attention. It's just that the composite operators, who I call the people who can, are looking to accumulate as much of this stock at a predefined price level that they can. All of it if they could, but we know that they can't. Now there's one price level on this chart that ends up being important almost every time, and it's called, I call it the creek, and Wyckoff used that same phrase, but it's a line, a horizontal line, based on the low point of the stopping point. And we can see that several times since the accumulation started that the creek has come into play, either as support or resistance, or both within days or weeks of each other. And one expression that Wyckoff used was jumping the creek, and that would occur that when prices do cross over the creek, that there's been a change in character in Cara Therapeutics, that enough accumulation has occurred, and that the people who can are now starting a markup phase that will take the price of Cara Therapeutics significantly higher before they determine that it's time to distribute the stock. And Wyckoff called that jumping the creek. So that's an important level to watch for. It's evident in almost every chart where there's been any fairly even brief period. This is only 3 months, but even sometimes these accumulation periods last years. But you can usually pick out these points and you can get a handle on what may be happening within the accumulation time, and also get a jump on when the stock jumps the creek, and maybe get in early for what could be a very significant rise. And that's one of the things that we wanted to look at. Now, just from our basic stuff, without really knowing much about Wyckoff, if you had been following Cara, you would have seen the Chaikin oscillator, which is a fast response volume price oscillator, moving up, which means accumulation was taking place off this low. And another thing that we have here on the Option Master Chartist market location page is the accumulation distribution subchart. And money flow index is useful to demonstrate either accumulation or distribution. And you can see that back in June particularly, that the money flow index has been trending steadily upwards, which indicates that the stock, Cara Therapeutics in this case, has been under accumulation. And now it looks like maybe that it's time for the breakout. One thing that often happens is that the stock will jump the creek and then come back and test, maybe go a little bit below. That's called a spring. And if you see the stock run above, come below, by not much, usually a little bit, and then take off again, that you want to have been an owner at that spring or as close to it as you can, because that's often the launching pad. Again, this was very brief whiff of Wyckoff. I hope you found it useful. It's definitely worth your while to follow up, even if it's just with the Bruce Fraser blog on StockCharts.com. I think you'll learn something about stock markets and public markets in general that you never realized.